Hi, traders. How are you? Everyone doing okay? Ren and Mark and Peter, Ingmar. Okay. You're feeling hot? Buy a fan. Hi, Zig, Hugo. Okay, everyone. Um, want to start off with the dollar? So dollar put in this little double bottom. You know, normally I don't really believe in them much. I would have preferred to see lows taken out, but I'm going with it. As you can see, a lot of confluence up here at this 94 to 94.10 level, which is where the first wave terminated, right around 94. So 94 is a real big area here. And just arithmetically, 92 and a half to say closes over 94, it's going to take you up to 95.50, which 95.50 has so much confluence there. You have moving averages there. That's where the uptrend was broken. So I think this could be a magnet that's going to be a big bull bear line, a big fight if we get up here. And I think there's a possibility that that could happen. 95 and a half. I'm not sure if that's going to be the final low. I know some Ellioticians are saying this could be a four, and then we get one more shot down towards 91, 90 and a half. So we'll see. But for now, going with the double bottom, I wanted to show you guys this. Sometimes it could be pretty simple. Check out the Aussie weekly. Look at where it stopped. Stopped on the 200 week right here, exactly in Aussie. So uh, we got this dollar rally. I think it's probable that we pull back to the 50. Okay, that's around 67, kind of a breakdown. And look how you could have confluence on moving averages. Here's your weekly, which capped the rally, right? At this level. And then down here is this 67 level on a weekly. And then you go to a daily, and here's your 200 day, right around 67. So same area, different TFs, and different MAs pointing towards the same area. So I think that's possible. And really, you want to look at euro. Why can't we see 114 again? I mean, maybe it doesn't quite get back to this breakout level 114, but it's possible. We have tremendous bearishness in the dollar right now. Just to shake out the people that bought it well. Initially, it was the move over 104, and then 110 really kind of set it off. 114 being even another important level. So I think that's a possibility. And then what do you think of this, guys? Look at NASDAQ. I think it's a 2-hour chart. Here's NASDAQ 2-hour. You have this, and then you have this action. And then look at gold. You have this, and then you have this action. Doesn't that look very similar? And they both had tremendous runs, right? Just found that interesting that, there could be a pretty correlation between NAS and gold to watch. Let's see if it holds up during the week, but um, that's what my eye sees. So let's have a good week. Oh, there was one more I wanted to cover. I know Steve says US dollar yen's an abomination, but after this straight line move that we had here the week before last, and this all happened on a Friday, I've noticed a lot of things are happening on Fridays after everyone's worn out from 4 days of trading and you're ready to let go. And then Thursday night in Europe or Asia, and then by the time we get in the US, a move is underway. But look at this move. Basically, this looked pretty corrective to me. And I think that copper's having a nice move back up because it sold off ETE last week. Anyway, I think there's a possibility that we're heading up towards the 108 level. I know I have so many fibs here, it's hard to see anything, but just a measured move, you know, actually be above it because this would be 2.5 from the lows or 230. But 108's a big area. And part of this, I think, is going to be again the big surprise. I'm not sure if there's one more dip left, but I was looking at the bonds over the weekend, and TLT does not look that good to me. Look at, you know, all this divergence up here. Looks like a little three drive. Could it poke one more time? Sure, but you look at this, like a struggle to get back up to the 78.6 level. And I think we had a pretty somewhat negative week. It was a blue candle, but this is saying lower for longer might be challenged. And I thought we might get down to 44 because one of our guests that I interviewed and was looking for 44 on the 10-year. But you know, 50. Well, if you're off 6 bips and this was a low, I guess it could wash one more time. But I'd be very careful buying the mantra of lower for longer, which is a universal call. And, it could really surprise people. Maybe the last wave, if we're going to keep blowing off in the stock market, yields finally begin to move. And, I think, yields could double from 55 to 120. I'm not sure how the market will take it, but a move like this would be constructive. The yen and USDN going up towards 111, 112, which no one's talking about anymore. Why can't we just see a fib retracement from over 3 to down here, which could take you up to over 2% on the 10-year? Just saying, you have universal opinion about, the Fed reinforcing it, saying that they're not thinking about even thinking about raising rates. Well, you don't need the Fed to do it. There used to be these things called bond vigilantes, right? So we'll see if they're going to come out for a ride on their horses with oh yeah, with their black mask on. Okay, so they were bandanas they used for masks back then, I believe. I think that's about all I wanted to talk about. It's still, you know, kind of confusing with S&Ps haven't done anything wrong yet, but I think the relative weakness between S&Ps and Nasdaq gives Nasdaq the title of weak sister. Okay, so if you want to play with stock indexes, Nasdaq would be the preferred short for a while. And crude, played it from the short side after it broke and then rallied here, but this bothers me a little bit. So we'll see what the dollar is really going to be the key to see if it holds. I wouldn't like the action in the gold, say if I mean in the dollar, if we started trading back under, say, 93 on a closing basis, back under here. But again, the 94 level key may not do it today. Yes, IWM is looking good. What's XRT? Ripple? Okay. Yeah, I think I had Ripple once in college. Ripple wine. Okay, so let's have a good week, everyone. Pretty quiet August Monday. Remember, markets are pretty thin. It's a little different this year where, people may not be taking vacations, but, could really slow up next few weeks into Labor Day, and then volume usually picks up again. So be careful about size in an environment with lower liquidity. Okay, good hunting. And I'm going to bring Blake in and get his view. And I pay attention because I always see things that I didn't see before when I look at what Blake and then Stell has to say, and then Steve has to say. And that's, I think, one of the best features of what we do here for free is you're getting some different views from, some pretty good traders, and surround yourself with people better than you and you'll rise to that level. XRT is retail. I would say, Amira, the one group that would benefit from a rise in yields would be a pretty out of favor group, be the financials. So if you're buying so that'd be like the XLF, because especially if the yield curve is steepening. So, it's already starting to look a little better, but you look, it's way underperformed everything. And look, it got a pretty good pop on Friday when yields started going up. So this group.
Dale, good morning.
Good morning, buddy.
We've talked about that before. I think that an initial reaction in yield steepening is going to be for the financials to benefit until they realize that actually big part of their balance sheets is going to have serious trouble with higher yields, and that's when it's going to start going south.
Yeah, but maybe they squeeze them up to, maybe.
The initial reaction is going to be positive until the market realizes that, many of the assets they hold, are not going to be viable with higher yields.
Yeah, like U.S. Treasury. I mean, everything, the whole valuation model will be challenged between having 10-year at 50 and a 10-year at 2% or even 1.25%. That creates some compression and competition for TINA. There is no alternative. Yeah. Okay, buddy. You want to come in now, or I'll bring Blake in and
No.
Blake could do his bias chart.
Absolutely.
Okay, buddy. How are you, Blake? How you doing today, buddy? I really had a hard time responding to my alarm today. How about you? Maybe he hasn't. Blake Morrow. This is ground control to Major Blake.
He's still muted.
Yeah, he's still muted. Blake, if you can hear us.
It's okay. If he's
all right,
unavailable.
He's probably busy. So, Sel, how are you today, buddy? You have a good birthday weekend?
Yeah, man, it was really good. It was quiet at home. We're trying to minimize. Hey,
sorry, guys.
It's okay.
All right.
Well, I was trying to listen to some conversations in my office, and then all of a sudden I heard Steve's voice, and then I had to turn my volume down because Steve started yapping around, and so I was trying to listen to two different conversations at one time. So,
good morning.
Good morning. Sorry, guys.
It's all right.
When you said you were going to pass it over to me, and then all of a sudden you guys got caught in another conversation. Then I had to jump over to another conversation. So.
That's all right.
How's it going?
Good. Okay. I had a hard time with the alarm this morning.
What's that?
Had a hard time responding to my alarm this morning.
Yeah, I know. Mine too. All right. Well, hey, I've only got a short period of time now. and I heard you talking earlier about, let me go over to the charts here. You're talking about the euro dollar. The one thing about the euro that I want to point out from today is that we have a big options expiration at 118. It's over $3 billion. So it's a big options expiration that might, kind of give the euro dollar gravitational pull a little higher throughout the course of the session before like 10 a.m. New York time. So we might get a bounce here, basically, is what I'm saying in the euro. But overall, I think the euro is setting up for a big double top, possible breakdown. Not necessarily today, but sometime below this 117 level. I think that's the risk right now with the euro dollar. So let's go into the charts really quick, and I'm gonna just get everything drawn out for you. So resistance for the euro intraday, I mean, we have to probably note 118 is the first resistance, and matter of fact, I'll probably just take a spike low here. One of these spike lows right over here at 118.20, but really the key resistance is going to be above 119. But for today, and I believe that we're still in a bullish trend. That's why you can buy dips, in the euro and not worry too much about it, is because we're still on a very strong bullish trend. But the thing is if we break through 117, that's going to be extremely bearish near term. Okay, so 117 support. Okay, let's go over to the cable. So the cable, very similar setup here. Now, Nitish in our chat room brought up a chart to me, which is something I wasn't even looking at. If you take the highs here from April 2018, spike high right here, that takes us right to the 132 level. 132 is really key because that's a horizontal resistance, 161% extension of this move here, that high to low. That all takes us to 131, 85. So we know that this is really critical resistance up here. Support is obviously 129.80. Okay. So let's write down that. That's going to be support. Resistance is, I want to say the overnight highs at 130, it's 130.90 roughly, but I'm going to just say 131 is probably pretty good resistance. Matter of fact, you know what, I'll take it a little higher than that. It'd be right here at 131. Well, it's 131.05. So that's going to be resistance. We're still bullish, but I think the risks are starting to build that we, get a little bit of a pullback soon. So, whoops, didn't mean to do that. Hold on really quick. Okay, so let's go take a look at the, let's go take a look at the Aussie. So here's the Aussie, and the Aussie dollar, last week, this 161% extension really came into play, and that resistance was pretty critical. That was 72.40. Now it seems like we're capped at 71.75. But if we can break that, we're still bullish while we're above 70.70. So this 70.75 level, that's something we have to pay attention to. Okay. Obviously, I'm already trading counter trend in the Aussie from last Friday, but and then it's small because I know it's counter trend, but it's still bullish while we're above 70.75. So that's plain and simple. Okay. And then we should probably write this down, 72.50, just in case we get up there. 72.40, I'm sorry, that was a typo. Now, one of the things that you might have noticed is the Kiwi is holding really critical support. We've talked about the support a lot this last week, and that comes in at 75.80 or 65.80, excuse me. And notice where we went to today. I mean, 65.77. So this 65.80 is really key. Whoops, 580. And remember, we have the RBNZ tomorrow. That's something else. Okay, we're still bullish while above it, but the risk is if we break through that, we are going to see the Kiwi do a little slip and slide, and that might actually have more to do with you know, the RBNZ versus anything else, which will be I want to say it's tomorrow night. Let me double check that. Wednesday morning. So RBNZ is going to be Tuesday night, Wednesday morning in New Zealand. Yeah. So a little more than less than 48 hours from now. Okay. Resistance is 66.25. Okay. One second here. All right. Let's go over to the dollar CAD. So the dollar CAD, this is a very important chart to me. This is channel resistance. Okay. It comes in at 134. You notice the high overnight was 133.95. It's really, really critical resistance today. If for some reason the Canadian breaks through 134, it's gonna be bullish. Now, if you guys didn't see it from this over the weekend, we did put in a big false breakdown. So if you look at the weekly chart, false breakdown below 133, that's a big deal too. So that means any type of move now back to this spike low here, which is 133.25, should find support. And in my opinion, we can only hope that we drop back to 133.25, because we drop back to 133.25, I think that's going to be the level that you want to be on the long side of the dollar Canadian. This is a range because we had a false bearish breakdown last week. So it's now a range, and the risk is we break through 134 and this turns bullish. Okay. Dollar Swiss. Grab my drink too. Double bottom setting up here. Resistance, the 78% retracement's at 92. Support's going to be at 91.20. And remember, we're bearish until we break back above 92.43, which would be 92.50 really. And we break back above that, then we're going to have to flip back to neutral. Okay. But I think, you know, the risk is building that we, you know, start, you know, reversing a little bit in the dollar. If you guys listen to my week ad video, you guys already know that. Okay, that I'm feeling that way. So dollar yen. So dollar yen still channel resistance. Comes in right around today's highs, or right around the, we should just note the 106.50. That's really resistance here. I'm having a hard time trying to be bearish the dollar yen, especially as we dip through, you know, 104.50 because of all the support down there on a weekly basis. So just remember, every time we dip below 104.50, the buyers come in. So, and that's been that way since 2018. So just keep that in mind when you're trading around the dollar yen. 105.30 is support. Today for support, it's going to be 105.75. Dollar index. Did I just lose it? There it is. Okay. Dollar index. So as I had mentioned on the week ahead video as well, divergent relative strength, double bottom setting up, 94 is resistance. That's going to be key. So I'm going to write that down. We're bearish while below 94, but we get above 94 and then it's going to change a little bit. Support intraday, right down to this spike high, which would be 93.08. I'm just going to write 93.05. Actually, 93.10. Okay, let's talk about the dollar Mexican peso. This one is pretty easy right now. Supports at 22.30, resistance is at 22.60, and we're just flip-flopping like a floppy fish between those levels, and we're in a range. US dollar, Norwegian krona. That was obviously a bad print. Okay. US dollar, Norwegian.
Those floppy fish formations.
Yep, you got a floppy fish formation is problematic if you're trying to be directional. The old floppy fish. All right, so 9. Actually, you know what? I'm gonna have to set this alarm here. I'm gonna move that alarm. Actually, let me right click, edit that. Send it up here because yeah, if we break above 908, that's bullish. Near term, like bullish when I say bullish, I mean it's for a bounce. It's bearish right now though. Support's gonna be right here. Spike high, a couple spike lows. Intraday, and you can see just even over here is a lot of support. So I'm gonna write that down as basically 9. Okay, and gold and the S&P is pretty easy, but we'll do it anyway because here, oops. Let's go to gold. Okay, here we go. There's 2000, there's 1980. Resistance now is going to be a little different because you can see this little wedge developing here. I mean, we break above that, and we could head back to 2075. So let's just call that 2040. Bullish. S&P 3,300 is support on the S&P, but we can probably find a better level than that now. Let's see, support. There's 3330, then 3305. So just to be a little bit more granular there, 3305, 3330, bullish.
Like I didn't have that spike over 3,400.
You know, this is FXCM's print. This is
okay.
a bad print. But it's the one
Steve had it too, I think.
Huh?
Steve showed that too.
Yeah,
week.
if you look at like you know, here's trading
interday.
views. You're not going to see it. So it just depends on what feed you're looking at. That was a bad. I was actually I happened to be sitting in front of my computer when that went off. That was that was during the rollover period. You could see it.
Oh,
like,
okay. Because silver would do that a lot. You know,
yeah, it wasn't a real print. I think, you know, the data feed over at FXCM was just messed up for that short period of time. So
all right.
Anyway,
Thank you.
3360 is resistance. So here's your bias chart, guys. It's done. I heard both Steve and Stelios here. So good morning, guys.
Good morning.
Good morning.
How's it going?
Very well, very well. Thank you. I am 49 years old now, officially.
You are. Congratulations. You made it this far.
Yeah.
You know, Greeks live longer than any other
No, we don't.
race out or people around I've seen. I've met more 100-year-old Greek people than I had any other people. That's because you guys live a really nice lifestyle.
Well, it depends on
the Mediterranean diet helps a lot for sure. And there are some areas in Greece like Ikaria, for example, Ikaria Island. Which
I mean, Euro meat, there's nothing healthier than Euro meat. Nothing.
Yeah.
No, it is. Right. I would attribute a lot of that to the Mediterranean diet.
Yeah, it's olive oil, which is, you know, quite beneficial.
And you know, here in the United States, you try to drink olive oil, but it's actually like a processed motor oil. It's not really olive oil. It definitely does not taste good compared to real olive oil, anyway. But yeah, well, happy birthday, Stelios. You're halfway there, less than halfway there to 100.
Yep,
that's good. Steve, how are you doing?
I'm doing 9 years better.
All right. Well, good. Well, you know, I was hoping this summer would have been a more busy and active summer, but it's actually been pretty quiet. I mean, when I say quiet, it's been very similar to other summers that we've had, where volatility tends to pare back a little bit. Liquidity gets worse, and you know, we just kind of range trade. I thought that this summer might be a little bit different with COVID, with more people at home, but it's been a pretty quiet.
It is astonishing considering
summer day. So yeah,
it is astonishing considering what has been happening.
The markets are just ignoring some important developments in the world. They're gonna stop ignoring them.
The fall will make up for it. I guarantee you.
Yeah, very, very possible.
Election.
Yeah, fall's probably going to be pretty. I would assume pretty volatile. That's for sure. So and let's hope it's a good fall with a good election season and hopefully a vaccine that comes through, and you know,
it'll be a good election season.
Well, election, what I mean by that is like good volatility.
Yeah, so, it will be.
Yeah, good. Would be depending on your political affiliation, but I'm just saying, from a volatility standpoint, let's hope we get some volatility. Anyway, guys, I'm going to pass it over to you. Everybody, happy Monday to you. I want to thank you all for being with me this morning through the analysis of the bias chart. We will be broadcasting in 4 hours the daily roundup, and for those of you that want to try to get Forex analytics for free, you should look at Pepperstone Securities. We have now partnered up with Pepperstone Securities, where if you open a live trading account, you can get Forex analytics for a couple months, and then if you have a live trading account and you trade 5 standard lots, I guess it would be called, you would get another 2 months of Forex Analytics for free. So check out Pepperstone, because we've been trying to formulate a relationship with them for a long time, because they're really one of the largest FX brokers in the world, and their customer service and the way they handle their clients is, in what I've found, is second to none. So and that's really important, especially in an age where technology is pretty similar. When you're dealing with FX, we're getting to a point where the playing field is kind of leveled. So where do you have to excel? Research and customer service. So and that's a big plus for Pepperstone. So you should check them out, especially if you are outside the United States and Canada. So and then if you are in the United States and Canada, make sure you visit our sponsor, Forest Park FX. They'll help you find a broker best suited for you here in the United States. So guys, it is all yours. I'm going to pass it over to you.
Thank you, mate.
Have
Thank
a
you,
good one,
Blake.
Guys, thanks. Have a great one.
You do.
So,
Hey guys, I bet you two
Hey, Bill.
guys only use virgin olive oil.
Yeah, that's true.
You do?
Yeah.
we actually,
Okay.
my family actually produce some. We have a plot of land in a Greek island, and we produce some. So I'll send you some at some point.
Oh wow. Okay.
Yeah,
Virgin too, huh?
extra virgin.
What's the
yeah.
difference between virgin and regular?
It's just quality distinction. So
It has nothing to do with like,
no.
All
No.
right.
Right.
Nope.
All right. You know where my head's at. Anyway.
Sorry to
Okay.
disappoint.
Huh?
All
Okay.
right.
Sorry to disappoint.
So, what can we talk about over the weekend? Well, we're talking about the elections coming up in the US. Probably a good place to start. The main thing is still US/China developments. And for those people who missed it, there were some sanctions on the side of the Americans on certain Chinese officials, and then the Chinese retaliated. They sanctioned 11 Americans. I'm losing track of all that, but definitely the whole psychology is not good. Also, Donald Trump over the weekend announced some executive actions because there's still no agreement between Democrats and Republicans. So he said there's going to be payroll tax deferral, not cancellation, not suspension. So he's gonna defer payroll taxes for Americans, I think, earning less than 100,000 for a few months. This is just moving the tax
In essence,
time.
also hinting that if he gets reelected, he's gonna
Yes, I was about to say
cancel it
that.
altogether.
He said there is a chance that he might, after December 31st, he might consider canceling some of that. So the classic. Everybody does this. Try to convince people to vote for you by offering money.
By offering money that's not theirs. Yeah.
Yeah, we know this well. The Greeks have been doing it for decades. Also, unemployment benefits, he wants to expand them because the original agreement has already lapsed. And if they don't do something, then suddenly all these people who are still unemployed are going to be faced with a big gap in their finances. So
there's a catch on that though, still.
What's the catch?
The catch is he wants the states to contribute $100 to it.
Oh, okay.
Okay, and
from the 400.
From 400, yes.
Yeah, and
yes.
and the states would have to develop a whole new system. So it's not certain that every state would go that way.
Okay.
And do it because they're already paying state unemployment benefits.
Yes.
Right, and these are enhanced coming from the feds. So the states are pretty broke. Look at all the tax revenue they've lost through tourism.
What do you mean?
Here
The
in
whole
San
country is
Diego.
broke. It's
Yeah,
not
they're
just the
very
states.
broke. They're very broke. So anyway, it looks good on the surface, and also to stop the evictions. His executive order doesn't, but it gives a chance for different departments to do something. So all of these things look good on when he said them, but if you read the fine print, it's not the same as it was before.
Understood.
So who knows how much will be implemented? Plus, both Republicans and Democrats aren't for him having a holiday on the payroll tax, because that's what directly funds Medicare and Social Security.
Yeah.
So, that's a red line.
Yeah.
So we'll see what happens. It was, grandstanding.
Yeah.
So
I mean,
anyway,
the run up to the elections is definitely going to be interesting in terms of what's being promised, and
they're wargaming it out this election. What would happen in this case?
It's going to be an amazing bidding war.
Yeah. We may not have results for days with the mail-in election. They've slowed down the postal service. They've cut back when you never needed the postal service more. So just like COVID has turned out to be not managed well, this election's going to be pretty interesting. It's not going to be like what we're used to.
Yep.
Anyway.
Well, let's see. Yeah.
I'm coming over for some virgin olive oil.
Come, yes.
And you know what Ziggy said? It's the difference is that in virgin olive oil, they leave the pit in, the olive pit. Is that true?
I actually don't know. Do they?
Okay.
No.
I thought that was a joke.
It was
Anyway,
a joke.
Yeah.
It was a joke then. All right, Jiggy, you fooled me.
Okay. Maybe they crush it along with the rest. I don't know. Okay. So what else is going on overnight? Very little data-wise. We had Chinese CPI marginally better than expected, 2.7% year-on-year, and Norwegian CPI marginally worse than expected, 1.3% year-on-year. This is now rebounding from basically almost flat a couple of months ago due to COVID. And this is in line with the rest of the world showing some signs of recovery. And I'm trying to think of something else to say, but really there's absolutely nothing. And the market has been quiet. Metals are doing nothing. Currency is doing nothing. So off you go, Steve, I think.
Okay. Dale, any requests?
Yeah, can you do Mamma Mia, please?
Sorry, not my specialty. We have other people doing the singing, and okay. So now, first thing to address, at a very general basis, is we have seen on Friday an attempt to turn lower in the vast majority of the currencies against the dollar, meaning we've seen the dollar stabilize. Now, I changed my drawings to potential little ascending wedges in the euro, in the pound, and if that's the case, both of them seem to have broken down below it. So, we're going to need to wait a day or two to find out if indeed that's the case. Alternatively, you can have a look at the DXY. Look at this rectangle we've developed here. Resistance is at 94. Above 94, we trigger a double bottom with the range being more or less 1.5, meaning a break above 94 would target 95, 50 to fulfill the target of this formation. And of course, would point to a deeper correction in the euro, in the pound, in the Aussie, so on and so forth. A big rebound in USD CAD. You get the point. Now, obviously, not surprisingly, if you have a look at the Euro USD, more or less the formation you saw in the DXY, we can also find here, this is a 4-hour chart, by the way, we can also find here in the Euro USD, meaning that we have a rectangle here, roughly a move below, what is this, 117 and change, would trigger further downside in the case of the euro. So is a move like this going to show that we actually found, a high and we're about to resume like the prior trend? Because, zooming out, somebody can claim that we're still in, long-term downtrends in the euro, in the pound, so on and so forth. I very much doubt it. I'm of the opinion that even if we do trigger these formations, and even if we do see stronger pullbacks, people are going to just bid it up and buy. I don't think it's easy to see euro below 115.50. In the case of the pound, let me switch to it. In the case of the pound, here it is. I don't think it's going to be easy to see levels below 128, so on and so forth. So yeah, I do think that the chances for a rebound in the dollar have increased substantially. I do think that we need to see a little bit more evidence, though, before we can happily jump on a likely reversal. But I do think that these moves are going to be corrective, in which case I wouldn't blame anybody for not even wanting to trade them, but would rather wait for them to unfold, to sell again the dollar and buy any of these currencies against the dollar for another leg higher. Speaking of the Aussie, since we just mentioned it before, Aussie actually had, quite a bad day on Friday. Not only we fully retraced Thursday's price action, but in essence, we even engulfed Wednesday's price action. Let's see if we're going to get any follow through, because I remind you, we had just barely traded for like less than a day above this long-term descending channel trend line resistance. I wasn't really persuaded that this is a valid breakout, because momentum had already waned. So I was not even considering jumping on the long side. Let's see if we get some continuation lower. That would have been a false breakout, at least for now. Now, USD CAD and USD NOK, you'll see that they have similar formations. Of course, the move lower in USD NOK has been much stronger. There's no question about it. And then I'm definitely a lot more bullish the Norwegian kroner than I am the Canadian dollar. But they both share some characteristics. They both have been trading lower in descending channels. They both are rebounding now and find themselves decently close to trendline resistances. So if you really want to fade dollar weakness, I think that any of them in a breakout, in the case of the USD CAD, that would be a move above 134.50. In the case of USD NOK, that would be a move above like 917. I think that should produce a decent rebound. We've already seen a period of clear RSI divergence. We've seen momentum somewhat slow, especially in the case of USD CAD. So we might finally see, especially in the USD NOK, we had a brutal move lower from like 1212 all the way down to 890. So for a currency pair, that's like a big move lower. So we might finally see some relief rallies before we can get the opportunity to sell again. Personally, I'm not looking to selling my position. I mean, I'm very deep in the money. I'll probably add after a rebound. I want to hold this position for a long time. I do think that there is a lot more downside coming. Now, having to do with the metals, undoubtedly, once again, we're going to have a lot of people calling for metal reversals. And yes, every time we do see a quite bearish candlestick after such a prolonged and explosive move higher, of course, the chances increase that we're finally going to see some type of a corrective move lower. And yes, under such an environment, it can be sharp. It can be quite violent. It can fool a lot of people that for some reason are still looking for, bearish reversals. I mean, long-term bearish reversals in gold and silver, so on and so forth. It can trap them to believe that they're actually finally getting vindicated. But once again, I'm going to warn that you shouldn't be trying to fight this trend. If you want to be short, yes, we did see quite a big day lower on Friday in the case of gold. Having said that, the technical picture hasn't really changed because we're still trading within this steep ascending channel. So, as long as that's the case, there is absolutely no technical damage done here. So far today is gold is really, I mean, we currently have like a little inside doji. So far today, there is really no development following Friday sell-off. As I said, at some point, and this might be the point, we'll see some corrective moves lower unfold. Personally, I'm not looking to sell gold or silver. I'm looking to be a buyer lower, especially in the case of silver. I mean, I do own a decent amount of gold, so I'm absolutely fine with that. I would want to buy silver though at a dip lower. So gold, assuming that it's going to break this ascending channel, the next area of support is at 1980. Now below 1980, we can start talking about a much bigger pullback. In which case, we might even trade back towards like 1810, 1850. I'm not saying it's going to be easy, but it's not completely out of the question, right? I wouldn't be betting that you're going to get that level to buy again, not yet, but it might as well happen. Now, in the case of silver, the daily candlestick on Friday was not that bad. I mean, yeah, it was a quite big, like indecision candlestick, which can act as a reversal after such a strong move higher. And we did hit the confluence of this ascending channel trend line resistance and the fib extension. So far today, though, we have like an inside spinning top, so really nothing to see here. Once again, you want to be more confident about a pullback, like starting from here. You would have to start by waiting for a breakdown from this channel and take it from there. I would have to say that 26 and change is the first area of support. Then we should be looking towards like 2480 to 25. Now, having to do with metals like platinum still remains well bid above 875. It remains bullish. We have the case of palladium. Palladium much tougher to call at the moment. Likely scenario, a long-term symmetrical triangle as a possible corrective move from this explosive move higher. I mean, this was a parabolic move to the upside. It reminds me a little bit of like a long-term chart of the USD yen, right? USD yen still unfolding like a very, very long-term symmetrical triangles correction after that huge move higher from 70 something all the way to 100 plus. So you might need to be more patient if you actually want to trade palladium. I would definitely not do anything with it like between like 1950 and like what's this 2350. I think it's in no man's land at the moment, so just let it be. Having to do with copper, suffered great losses on Friday, but look at today's candle. We've retraced more than like 3/4 of what we lost on Friday, and coincidentally or not, look where we stopped on Friday. We stopped exactly when we tested this ascending channel trend line support. So, this channel is still holding quite nicely, triggered a very nice bullish reaction. So really, I wouldn't be shorting copper as long as we trade within this channel. I think it's a dangerous proposition, and I'm pretty sure that a lot of people that, sold on Friday are probably already regretting it. Having to do with crude oil, nothing has really changed. I mean, I just remain patient and I'm monitoring this ascending triangle. I mean, we've been moving very, very slowly. As I've said many times, I wouldn't be surprised if this results in one more thrust to the upside, probably like a terminal move that's going to trap a lot of people thinking that we're breaking out after a period of consolidation and we're headed much, much higher. I think most probably these people are going to be left holding the bag, because I would expect a reversal and a much deeper corrective move lower before we can actually unload and have a much easier job in accelerating to the upside once again, because I do think that this move higher is already quite fatigued at the moment. So I wouldn't be buying crude oil here, no way. I'm going to be more than happy buying lower. 29, for example, would be ideal, but I'm not willing to buy here, even though I do believe that in the short term we might see a short-term move to the upside. I'd let other people do the buying here. Now, having to do with indices. Nothing really has changed here. I mean, from a technical perspective, there is no real argument to be made to be short. I do think that there's absolutely no risk reward in being long. But we're still seeing this slow drift higher. It's annoying because it's moving very, very slowly. If you see both like the S&P and the Nasdaq is back testing actually this breakout area at 11,050. So this might act in the short term as support. Who knows? We might see another push higher towards the 161.8% extension at 11,540. I wouldn't really be surprised. I mean, we're still within this blue ascending channel. Looking at the VIX though, I would definitely be quite worried, because we've seen this formation unfold multiple times in the VIX, and it's not very, very easy to time the exact breakouts. But whenever we've been seeing this price action that is coiling, that is diverging in comparison to what's happening with the index itself, usually we end up having some type of an explosive move higher, even if that ends up lasting just for a few days, as it happened here in the previous time, lasted like 5 days or so. But keep in mind that within 5 days you can easily see an explosion from like 22,
That's a big
23
one down
yeah.
there. The last one we called was, it doubled.
Yeah.
Steve,
and the same thing can happen within just like 3-4 days. You can be double that.
Yeah.
So from the perspective of the VIX, I think that the trade to be at the moment, if you want to be trading the VIX, is definitely perhaps buying some calls here. They don't have to be like long-term calls. I would assume that within the next few weeks we're going to have the next spike higher. I have no clue what the catalyst is going to be, because just looking for possible catalysts in this market is futile, in the sense that this market has anyhow so many catalysts. If it actually wants to go lower, I mean, there are so many good reasons to do so, but we've repeatedly seen that it keeps ignoring them until one day, for some reason, it stops ignoring one of them or some of them.
Steve, besides the triangle, the one feature I see that's interesting is with S&Ps going to new all-time highs and NASDAQ, we never filled the gap that we left last February.
Oh, we're far away from that. Far away from that.
So
and I don't believe I don't believe we're going to fill it anytime soon. I can tell you in advance. I don't believe that gap is going to be filled.
Are you telling your enemies last time before it popped from 14 to 4? You're telling your enemies to sell volatility right now?
To be honest, yeah. I mean, if I told you to sell volatility, probably I wouldn't like you that much. Not at current levels, after seeing this pattern, persistently.
Short here looking for 10. Yeah.
Yeah.
Okay. All
It is
right.
amazing risk reward. You can find yourself at 45 within like 3 days, but yeah,
Yeah.
sure, go ahead and sell, to grab a couple of points to the downside, right?
Yeah. Well, it's almost interview time if you're done.
Who do we have today?
We have Dave from at Moneyology with us today. First time he's been here.
I like the title, Moneyology. Okay.
Yeah.
Okay.
So let me
Yeah, we listen. We have plenty of questions, but we're exactly at the top of the hour, so I don't want to steal, time from the interview.
okay.
Members
All
can
right. Well
always
then.
ask in the chat room, right?
Yeah. So yeah, he had a false fire alarm in this building. So, but he's back. So, um, yeah, Dave, I'm going to get you set up now as a panelist, and looking forward to speaking to you. I'm glad it was a false alarm. How are you, Dave? Welcome to Face.
I'm great. How are you guys doing today?
We're doing okay, Dave, for Monday morning. You had your adrenaline going a little bit, huh? With
That was absolutely insane. The first time I get interviewed on any, podcast or anything like that, I get a fire alarm. I have to drag the kids and the wife out of the home.
all right. Well, I
Strange.
could tell you're a trader because you don't let anything stop you. Have you used Zoom before?
I have, yeah.
Okay, so you know how to share the screen, drop down menu with that green screen share?
Yes, sir. Let's do it.
So I went to your website, nice web. Oh, there it is. Okay. So I went there, took a look at it, and before we get into, your business model and what you do at Moneyology, could you tell us a little bit about your journey and how you learned the business, if you had any mentors, your first, experience in trading, just a little bit about how it went for you on the trail on your
Sure.
way to setting up Moneyology.
Absolutely. I mean, it was a trail paved with a lot of pain, if you will. I started investing in the early 2000s and trading and investing, and I really picked up my first book on Warren Buffett, and that's kind of how I got my exposure to the markets. I got my CFA. I was really big on balance sheet analysis and so on. And I would buy stocks that had great balance sheets, and I would just wait and hope that they meet their intrinsic value, if you will, over time. And then what I realized pretty quickly is that waiting for stocks and hoping that they meet their intrinsic value without having any idea for trends around what's going on in the general markets is a recipe for disaster, especially if you're coming into 2008 and so on. So I quickly started following trend analysis. Was mentored by someone named Eric Mawade. I'm not sure if you guys are familiar with him, but anyway, his approach is basically price and momentum. How do they correlate with one another? Which one is leading? And I'm a big guy on behavioral finance. My professional background is I work with I'm an institutional money manager. And I realized that basically for most people, it's just hope and pray investing. They just buy and wait for the long run, and hopefully have the patience and time and behavioral fortitude to be able to withstand kind of the volatility of the markets. But for me, I realize that trends really dominate investing, and if you can really understand what those trends are and how they operate, you can really make a lot of money. But I love education. I'm very passionate about teaching active investors kind of to avoid the pitfalls that I myself basically experienced over my 20 plus year journey. And so that's where Moneyology came about. It's not your typical trading blog or platform where people get advice. This is intended to be an education platform where I teach active investors to better understand their own portfolios, better understand their own psychology, and hopefully identify trends, contrarian trends, perhaps momentum trends that might last for 5, 10 years and really create a lot of long-lasting returns.
Okay, then, Dave, what's on your radar going into the election and what's been happening with COVID and the fact that we've recovered all the losses? I know personally I was surprised after the March, not well, the magnitude of the Fed March decline, I think surprised a lot of people, but the recovery I think was even more surprising. Not that it did recover, but that, as a trader, I was looking at, maybe we could recover some fib level before another wave down, and here we are, knocking on the door at new highs in S&P and NASDAQ, having made historic highs. Is this a mature trend or a trend that you see continuation in for, like you said, looking for your long-term trends? Probably no indication of a trend change for you, right?
At this point, there's no indication of a trend change in the larger equity markets. I think the direction is up. Most folks think that things are going lower, and I definitely saw the earlier patterns on the VIX, and I see that as well. There's going to be a lot of volatility, but I think the longer term trends in the equity markets continue to be higher. I'm not one to chase at this point. There's just, as the gentleman said beforehand, the risk reward isn't there. But where I do see a lot of opportunities still, certainly when we're looking at the equities, is in the small cap space. Those are starting to outperform the large caps. Emerging markets are starting to outperform the U.S. domestic names. So that's very interesting. Underneath the surface, I'm seeing financials really starting to pick up. Dow Transport's really starting to show positive divergences, both in absolute and relative terms to the overall markets. But to me, that's not as interesting as kind of the larger term trends. Where sectors like uranium, for example, have been in downtrend since 2007, 2008, and are starting to break out of 12-year downtrends. And what that might mean for equities in that sector is pretty phenomenal. We've been on the precious metals kind of bandwagon since 2016, when the 6-year downtrend broke, and then kind of had that pullback, multi-year pullback, and then 2018 really took off again. So obviously we're seeing the fruits of that trend right now. So I mean, we've seen since March 5 and 10x returns in some of the names. And so what we try to do is we have watch lists of 300 plus names in this, for example, in the precious metal space. So the objective is to really identify the long-term trend, ideally a trend that's been in a downtrend for many, many years, and then find and use technical analysis to find some of the best names in the sector and basically ride them, and obviously have trailing stops over time, and let the markets dictate how long these trends do go. I do believe precious metals are setting up for a pretty nice correction, and so I tell all my subscribers to be cautious here. Don't necessarily sell the positions unless they fit long-term targets, but certainly have tight stops, because a pullback of 10% in the metal could mean a pullback of 30 to 50% in some of these positions. So
yeah, you're getting that market tell based upon last week's action, where you had gold up $60 and GDX pretty much almost unchanged on the week, and Newmont the same thing, where the gold shares are lagging the physical. To me, that's a bit of a market tell that we could be due for a correction, because I was taught that the shares lead the way in a lot of different sectors, especially in miners.
Yeah, absolutely. And this is a monthly chart, but just going into a weekly chart, I saw for quite some time there was a negative divergence where the juniors were underperforming the metal, and that's not a good sign anyway. And typically speaking, when I saw across the board 300 plus charts, with few exceptions, you had all the targets being hit, long-term targets, and so I just felt like a correction was happening. And then when you saw the metal, like you said, up 6-7%, and the juniors flat to negative, you knew that there was a point where there's going to be a pullback. The thing that I don't recommend doing, certainly in a bull market like this, is to ever go short. Certainly, unless you're a professional knowing exactly what you're doing, because you can really get killed in that space. So I don't short. I buy hedges on my positions using puts, and that's worked out well for me. But now, shorting is just not my style. And I think the general lesson that I try to teach my subscribers and the followers of Moneyology is, look, you have to know your personality. You have to know your time frame. You cannot just be a day trader if that doesn't fit your personality type. If you're a long-term investor, you have to invest long-term. You just have to hopefully identify trends and ride them if that's your style. But day trading is not for everybody, and certainly too many people, including me personally, you can really get burned doing that. So that's the key. I think really understanding psychology is the key to long-term investing success.
Is psychology changing with the growthier names in NASDAQ? I've noticed some underperformance, a little bit of the inverse of what was happening during the acceleration phase to the upside in the market, that NASDAQ 100 is beginning, most days it would be up 2% and the S&Ps would be up 1.25%. And in the last several weeks, S&Ps have a stronger looking chart and they've been outperforming NASDAQ 100. Is there a message in that?
I think the message is there's a natural rebalancing occurring in underneath the surface of the markets. It's the many names in Nasdaq led primarily by technology and biotech. They've done incredibly well, and I mean, to see a company like Apple go 2x since the March lows, that's incredible. But underneath the surface, you're seeing a rebalancing, a rotation into the industrials, into the financials, into the small caps, because really as the economic numbers improve, those are the areas that are going to start benefiting from all the stimulus. Up until now, it's just been kind of the utility trade. The new utilities are the tech companies. But another trend I'm seeing, Dale, is interest rates are bottoming.
I was just going to ask you that. You're a mind reader. Okay,
Yeah.
so you know that it's a universal mantra, isn't it? Lower for longer, and I think it's going to be interrupted.
Yeah, absolutely. I mean, I don't know if I'll have a chance to dive into that, but basically we filmed a video just over the weekend here, where we showed that interest rates on the 10-year Treasury here. Let's see if I've got that. Basically, you have a bullish wedge here that's being created, and you have positive divergence from the previous low back in March. And when you're seeing commodities, and I'm sorry, it's not. I don't know why it's not annotated right now, but you're seeing commodities all across the globe starting to rally. Agricultural commodities, obviously, we know about precious metals, energy starting to pick up again, and you're seeing financials benefit, right? That's the margin compression that they've been facing certainly since March may kind of alleviate a little bit. So interest rates, I could see the 10-year Treasury rally to 1.2 to 1.5 over the next 6 to 12 months. And if that happens, I still think long term we're going to zero. But if that happens, then you're going to see a lot of changes in the underlying kind of infrastructure of the market. Also, inflation. Long-term inflation is breaking out against deflationary trends, and that's very unique. And this happened in January. If you map out a 20-year chart of inflation against deflation, something happened in January where inflation started to break out, and that's a trend that's going to take place for many years. And so for me and for my clients, both personally here with Moneyology and professionally, that's a trend that I'm following very closely.
Okay, so you mentioned grains. Do you participate with ETFs looking at grains and softs and other commodity sectors, where or do you look for individual shares that are part of that, say, agricultural industry?
Yeah, I haven't yet gotten into the futures markets, and that's something I plan on moving into over the next decade. That's an area I'm starting to study right now. So futures on grains, I haven't really traded, even though there's an opportunity there. And really the underlying companies, there aren't too many of them. So for me, I'm still a Warren Buffett guy. I still try to find the best companies and sectors, in bullish sectors. So I haven't dove into that space as much as I'd like to. But I mean, look, when you're talking about agriculture, most likely, potash and various different, agricultural stocks, that's an area that I'm going to be looking into more and more over the next couple of months.
Do you have a uranium chart you could share with us?
Absolutely.
I know you're very, that's a big part of, and
Absolutely.
a lot of people were on this fairly early. So do you think that, say, for example, Biden gets elected and, part of the stimulus that he's proposing would be a move towards green energy. Is nuclear energy going to be part of that combination? And that's why uranium is performing the way it is. Oh, so it got killed in March too, and has fought its way back. Okay.
Yeah, it's hard to say with Biden and the Democrats. I mean, now they're coming around to the uranium idea as part of the green energy solution, which is fantastic. I think around the world, even the more liberal politicians have come around to the idea that nuclear is a very good force for the green agenda that they have, if you will. But I think in the U.S. it's a bipartisan issue at this point. But globally, the demand for nuclear is skyrocketing, and you're at the tail end of a 12-year cycle where you have the combination of Fukushima and the global financial crisis, and the amount of underinvestment in the sector that's already so small is spectacular. So the supply and demand numbers are coming together in a way that's probably more attractive than any other sector in the entire market. And I follow, again, both the technicals and the fundamentals of the global markets. I mean, the trade here is fantastic. If you look back in 2000 and in the first part of this century and millennia, uranium went from anywhere from $10 to about $150, and you had some companies go from 10 cents to $10. You had 500 companies in the space. Now you're looking at a sector that across the globe, certainly in the US, there are about 10 to 15 names. I mean, it's an incredible consolidation that's taken place. So if you do,
how many companies now from 500?
About 10 to 15 in the US. I mean, if you look at my watch
Wow.
list here, I'll just dive into that right.
It was like the Bataan Death March.
Yeah, and so the names that have survived. Okay, so it might be a little bit more than 10 here, but the names that have survived are you can count them on a couple hands here. So they have some of the best management teams, I think, the ones that have survived. And if you do your due diligence, there's some life-changing opportunities here. So with regard to the chart of uranium, here's the one that I showed. The URA is not a pure play ETF at this point, but it still shows kind of what's taking place in the sector. And this is since 2015. If you extend this back all the way to 2008, you can see a general trend. But basically, we've been in this consolidation here all the way down, and we finally broke that. Obviously, had this fake breakdown in March. I think everything broke down. But once that recovered, now you're starting to see an uptrend take place, and you're seeing it
Should
across.
hold $10 then, right? On any
Exactly.
pullback.
Exactly. So it needs to hold this level. Obviously, if it doesn't hold this level, then that entire narrative is out the window. But right now, it's a very exciting time in the space because still opportunities are trading at 99 cents off their highs. So pennies on the dollar.
Okay, interesting, because a lot of people don't talk about it. Interesting. Anything else that's on your radar you'd like to share with us today?
I think in general, right now I'm just really focused on commodities and, like I said,
Okay.
precious metals and uranium, energy, and natural gas is actually starting to pick
Yeah.
up. Natural gas, similar to uranium, is one of those green plays that's been absolutely hit with oversupply over the last couple of years. Now, while I don't have a chart in front of me here, it's really
It kind
starting
of
to
came out of
break
the
out.
hole last week, I think, or the week
Yeah.
before, right?
Yeah, absolutely. So I'm looking to see an established uptrend. Natural gas, where it actually trades very interestingly similar to the VIX, where it just gets consolidated over time. It goes into a wedge and then it pops, and then everyone thinks we have a new uptrend, and then it drops again. So I want to wait a little bit for confirmation on that. But there are some names in the sector. SandRidge Energy comes to mind that were multi-billion-dollar companies, and then we're on the verge of bankruptcy. And so if you can catch that trend right before it reverses and do some due diligence and some good names, and that's what we want to do with our charts and we do through our videos, that is what you want to do. We've been long solar for quite some time. So that's a trend that right now I wouldn't chase at this point, but that's been a really nice trend over the last couple of years. And just in general, clean energy. We had wind technology, water technology, all those sectors have been kind of exploding higher over the last 3 years or so. So I think that those trends are coming to an end. Now they're becoming kind of more conservative investments, but the long-term money has already been made in a lot of those sectors. But in uranium and in copper and a lot of these clean energy commodities, I think that's where you're going to see an explosion of volume over the next couple of years.
Okay, is silver part of that clean energy revolution because it's used in solar panels and or for anything else?
Absolutely. I mean, I don't think that silver is trading right now based on that revolution, but certainly the demand in silver is going to continue to go up as that revolution comes to fruition. So, you know, when I'm thinking of that revolution, I'm thinking of cobalt, I'm thinking of nickel, uh, palladium obviously was in that camp. I think platinum's going to come into that camp, and silver plays a big role. I just don't know how much of that sentiment is created by that kind of the fundamental demand. I think right now it's all about the precious metals craze that's going on.
Okay, and do you have any kind of view on where you think WTI, did it having it go negative, did that surprise you? I never thought I'd see a futures contract go negative.
Yeah, it's been incredible to see that. It's interesting. I have a similar view to the gentleman, and I'm sorry I missed his name because I was outside.
Steve, that was
Steve.
Mr. Volge, yes.
There you go. He was very good. I really enjoyed his. In terms of crude, I have a similar view that I think short term there might be a fake breakout because it's a bit long in the tooth. But longer term, I do think that we're going to see higher prices closer to 62 to possibly as high as 77. I think longer term we're probably going to be in a very nice bull run. I'm not sure we're there yet. This particular chart is, I wouldn't chase it at this point. We filled this gap here at
Yeah.
42, and at this point I want to see what the market tells me. Is it going to pull back to 32.50, possibly a bit lower, or is it going to break out towards 62.50? It can go either way. I'm watching the underlying equities very closely. We just did a video on about 30 top momentum names in the sector because I think in general the rule is the companies lead the price, and so
It is. Yeah.
Whereas I feel like the actual commodity is a little bit long in the tooth. When I look at some of the companies, their stocks are just starting to break out, and so if they start leading, then I think we're going to see a breakout here. And hopefully it's not a fake breakout because I've seen those before. Certainly in the shipping space over the last 12 months, there have been a lot of fake breakouts. But we'll see. I mean, that's the beauty of following the charts. It gives you probabilities. It doesn't give you certainties, and you have to trade on those probabilities.
You doing anything in kryptonite?
You know, I follow it, but I don't trade it. I see breakouts there, and
is there really kryptonite
in the crypto space?
The kryptonite.
No.
That's what Superman had to.
Gotcha. Okay, fair enough. It's still way too early for me here.
I've been waiting for 20 minutes to use that on you. Anyway, so all right, so you have a view on cryptos?
Cryptos, I'm not strong on it in terms of an investment thesis, but from a charting perspective, Bitcoin, Ethereum, they're looking really good long term right now.
Yeah.
And I just unless there's
I can't wrap my head around it either.
Exactly. I want to be able to fundamentally understand why I'm investing in something, even though I'm buying and selling based on technicals.
Okay. Well, really pleasure meeting you, Dave. And I've interviewed, probably close to 1,000 traders over the years. And when you've done that, you could tell when somebody knows that you know that they know. And glad that we had a chance to talk, and people could follow you on Twitter at Moneyology, and that's also your website name, www.money. Am I pronouncing it right? Moneyology.com.
Moneyology.com, and thank you very much, Dale. I think just final words. There is a lot of premium content, but I am doing my best to create as much free content on the site. I really highly recommend folks checking out this fundamental zone. What I've done here is I put together through the St. Louis Federal Reserve charts, live data stream of some of the top fundamental charts in the sector. So if you click on something like this, industrial production, you'll get a pop-up that gives you literally a live feed to the Federal Reserve. So
boy, is that an ugly chart.
Yeah, I am a fundamental. Well, these charts are typically updated through end of Q1, so obviously
Yeah.
we know what happened there. But I am a technicals guy, but fundamentals still matter, and I think these are very valuable when you're looking at some of the, you know, the volatility that we might experience over the next 12 to 24 months. So anyway, best of luck, and I really appreciate
Yep.
the time, and
Oh,
have a great week.
Okay, Dave, you're now my trading warrior brother. You survived an interview with Dale Pinkert. So
Awesome. All right,
thanks a
a lot,
lot for
buddy.
edifying faith today, Dave. I appreciate it.
You got
We
it.
all do.
Take care. Bye.
All right, everyone. That's a wrap. Check out uranium. All right, everyone. Have a great rest of the trading day. We'll see you for turnaround Tuesday. Good hunting the rest of the day. Adios. You're very welcome, everyone. See you, Dave.